Hi everyone. Let's take a look at problem or exercise 4-4 where we're asked to put together a multiple step and single step income statements. Two accountants from the firm Ells and Wright are arguing about the merits of presenting an income statement in a multiple step versus a single step format. The discussion involves the following 2007 information relating to P. Bride Company, and the dollars are presented in thousands. Okay, so we have some information, appears to the left of my mouse, talking about, looks like income statement items, and we're asked to first prepare an income statement for 2007 using a multiple step format, and they tell us that the common shares, which appears right there, are 40,550. Also, thousands omitted, so that's 40,550,000 shares. Okay, and we've got a little bit of a format already put together for us. So the first thing we need to start out with is sales, obviously, and I think we have that right here. So we can just reference that cell, drop in sales, and the dollar amount is given at 96,500,000. So we'll drop that in. Okay, then once we have sales, we need to back out cost of goods sold when we're preparing a multi-step financial statement. So we'll grab that reference from right there and back out the dollar amount that goes with it, which is 60,570,000. From there, we can compute gross profit, and I'll just type that in. And the formula would be sales less cost of goods sold. Okay? That gets us to 35,930,000. Then we would add in operating expenses, and the first thing that crosses my mind is the selling expenses, so we'll drop that in. And the selling expenses, it looks like the first item they have, I'd put this in declining order, so I'm going to grab sales commission first. Okay, and that dollar amount is from there. Then the next item would be depreciation of sales equipment, so we'll drop that in. And the dollar amount that goes with that is the 6,480,000. And then the last item would be transportation out. Sometimes this is called freight out. And remember, this is the cost we pay to get the goods to our customers. So it's not a component of cost of goods sold. Instead, it's considered a component of the selling expenses. Okay? And then if we sum all of that, we have our total selling expenses, which I think are, 17,150,000. Okay, let me see if I can slide this a little bit so we get a little bit of room to work with. Okay, we get a little bit of room. Next, we want to consider administrative expenses, so I'll type that in. And do we have officers' salaries up there? Was that up there? There it is right there. So I'm going to slide down. I was going to think I could freeze this, but I don't want to do that. I'll just keep sliding, and I realize that's a little bit annoying, but we'll do our best. So actually what I can do is type it in instead of referencing it above, and then I don't have to slide as often. So officers' salaries, and the officers' salaries from above was 4,900,000, so I'll drop that in. And then after that, we have to have depreciation on the office furniture. There it is there. Now that's in cell C14 and G14, so I think if I come on down here and do equals C14 and equals G14, I've got the right amounts. Perfect. Okay, then I'll sum those two cells, and we come up with administrative expenses of 8,860,000. And if I add those two together, I have my selling and my administrative expenses combined. Sometimes it's called selling, general, and administrative, and sometimes administrative is combined as general and administrative. 26,010. Once we have that, we can subtract that from our gross profit to come up with a line item that we would call income from operations. Okay? Then we would add other revenue and gains, and I think there was a rental revenue. Let's slide back up a little bit. Yeah, there's our rental revenue right there. So we'll reference that cell and drop that amount in. Okay, I need to slide a little bit so we have a little bit more room. And after we've come up with rental revenue, now this is interesting. They don't give us a line, just a subtotal, and that's fine. I've seen that quite often, where we take income from operations and other income, and this would be income from operations plus other revenue. But it's fine to leave that just as a subtotal with no title. Now, then we have some other items, other expenses and losses, and really the only item we have here, other than income taxes, which we'll get to, is interest expense. And interest expense is $1,860,000. Okay, so then we're at income before tax. Again, now we just take that subtotal with no reference, less the interest expense, and we're down to $25,290,000. But we're still in positive terrain, so we have income. That's good. And then we need to back off our income taxes. Let me slide to see if I can get that. Yeah, we can barely get this on the screen. There's our income tax line, 9070. And from there, I think we've accounted for everything. Net income, 25,290 minus 9070. So we come up with 16,220,000. Earnings per share, then, we would have to take the 1622 and divide it by the number of common shares outstanding. And it looks like they give us just one number for the year. Since they're both in thousands, you see I'm pulling from here, I don't have to do any fancy calculations. And now we'll show you that that came to 40 cents of earnings per share. Okay, now that we have that, I think what I want to do is hide this. I'm going to do this in sort of a fancy way. I'm going to group it, and then I will shrink that down. Okay, now I need to just shrink one little area so that you still see a little bit what's on the screen. There we go. I think that's fine. Okay, so all I've done is put this little plus sign here where you can see it, and then I'll shrink it down. And now we can do the same thing with Part B. Okay, so we've got a little bit of room to work. In fact, we don't need the instructions for Part A, so I'm going to hide that to give us even a little bit more room. And I can hide this one too. Okay, so now we've got a little bit of room we can work with. Okay, so the revenues net now with the single step, we'll just show you how this works. Net sales, pull from above, is the 96,500. Then the next thing we would do is put the next income item there, and that would be the rental revenue. So we can reference the rental revenue, because what we do with a single step is we combine all the incomes together, all the sources of income. So we come up with that, and then I'm simply going to add those two together. So total revenue is 113,730,000. Then on the expenses, we would just list them, and usually in declining dollar value. So cost. This is cost of goods sold here. We'll drop the cost of goods sold there. Then the next thing we drop. What's our next item? 60 million. Is there a bigger item? Well, probably the selling. If we come from above, the combination of these three items was, I think, 17,150. So I think what I'm just going to do is sum that. We'll call this selling expenses, because in a single step income statement you wouldn't put in the detail. So I'll sum from above those three items. 17,150,000. And then we would do the same thing with administrative expenses. I'll type that in. Or actually, I don't even need to type it in. They told us right there in cell C12 that that's administrative. And then I can sum again from those two items that come up with administrative for 8,860. The only other item we have left is the interest expense. And again, there's no breakout of operating income or non-operating income with a single step. We just jot it down. Okay? Sum the total expenses. You see I capitalize the M in sum. It doesn't matter. Excel will know that, and then it'll fix it for you. See how it turns it all into caps there? Okay. 88,140. So let's slide a little bit. income before taxes, then we just subtract, we take the total revenue and subtract the expenses from it. And then the only item that still shows up below the line is the income tax, below income before taxes in a single step. So even though you combine the expenses here, income tax does not get combined in a single step. It still is in its own separate area near the bottom of the income statement. And then, of course, net income hopefully should be the same number, $16,220,000, and the earnings per share, exact same calculation. Take the $16.20, divide it by the $45.50, so we come up with 40 cents. Okay, $16,220, and above here, we came up with $16,220,000, so we've done it the same way. Okay, then just a couple comments on which one do you prefer and why. I'll just list some reasons. With the single step, one is that it is more simple, so it's one advantage you could say would be I'm just going to say it's simple and concise. Okay, so that would be one reason. Let me slide. Let's see if I can do this the right way. Is it Alt-Enter? I'm going to just keep going off to the side. Second reason, it's you could argue that it's easier to be understood. So why don't we call that it's better understood? Okay. You might also make the point that it has an emphasis on total revenue, total costs and expenses, and net income, right? Because there's not as many sub-calculations, so it's sort of getting you there. And I spelled expenses wrong. There we go. Perhaps one other point we could make, it doesn't imply that some expenses are more important than others. So it doesn't imply a priority. I'm going to say except for income taxes, which definitely is separated, so it implies that it has its own situation or its own priority. Okay, those would be advantages, reasons you could prefer a single step. Now, a multiple step, the strongest argument is that it provides more information, right? Through segregation of operating and non-operating activities, right? So it's separating income from operations from non-operating results or activities. So that's that would be an advantage of the multiple step. The other point is it tries to match expenses with revenue and sort of put them together under operations. So I'm going to say under operations, there seems to be a match of costs with related expenses. Okay, and those are the two areas that thoughts that come into my mind about the single step and the multiple step income statement, and why some people might prefer one over the other. Okay, so let's slide up to the top so you can see both answers again. There's our multiple step, and down below was the single step. Okay, thanks everyone.